we should give a better round of applause. बहुत थका हुआ applause. Start. I think it's a great pleasure, privilege to have these people here and have you guys here. I actually want to start. This is, I think, a fantastic event. Daniel, Pallav, his team, Akshar, I think have done a really great job. Lot of hard work. I think we should start by giving the organizing team a big round of applause. If you have had good food, it should come out. So whenever I go to colleges, I actually force people to clap. So try. This is the last session. You are going to go for a drink in the weekend later, I'm assuming. But I was told it's a star session. So these are like superstars. I think all these people need no introduction, but I do. So, I wanted to become a fund manager in 1996. I joined Unit Trust of India. And then I realized that I can't do fund management. So the next best thing was I moved to sales. And Amit told me that sales people make a lot of money, but I think what do you think? Who makes a lot of money? Sales people or fund managers? Who makes a lot of money? Sales. Fund managers, they make a lot of money. Okay? So I did not become a fund manager, so that's why I'm asking the questions. And I just want to ask you one more question just to wake you up and shake you up. Okay? How many of you want to, for people who are below 50, how many of you want to retire at 50? Raise your hands. Let me see the hands. Retire at 50. So I retired at 52. That's why I'm a senior advisor. But nahi maza aata boss. In 3 to 4 months, I got terribly bored. So आप सोचो कि retire होना है नहीं होना है. But let's come to the star panel. We are talking of the secret source of success. And all these star fund managers have given the returns of 25-30%. And I tried my best, by the way. In the room before here, I said, please put stocks to de do. They all refused. So what you have to do is go and meet them after this, say, I will take a selfie with you, and then ask for a stock tip they might give you. But on a serious note, I think they have been doing a fantastic job. I just wanted to say something here before we go to the topic. I I had the fortune of going to Hong Kong in the last 4 days, and I did 18 meetings. And these were fund managers, wealth managers, and to all of them, I pitched India, and they all pitched Hong Kong and China back to me. So there is still a long way to go for the outsiders. But one common question that I want to ask the entire panel, and maybe starting from here to that side, we hear the normal narrative, right? कि India में consumption story है, young Indians है, infrastructure investment है, RBI policy है, interest rates है, GST cuts है. But ये सोच छोड़ के और क्या? What of the India story that excites you? That in 2026 you would get up in the morning and say, boss, I want to buy these stocks and make a lot of money for my investors. A simple question.
Hi, good afternoon. So I think, Abhijit, the good part that is happening about Indian markets is a lot of new age companies are coming to IPO, and traditionally sectors and industries which were very, very difficult for investors to participate in the growth story is becoming a much more reality now. If you see just the sort of kind of IPO pipeline that is already there in the works, close to $50-55 billion, I think you will be getting so much on your menu in that sense that the next 12 to 15 months, if you get into right companies in those things, the next 3-4 years, if you get at right valuations, there will be a lot of money to be made. Obviously, as you said, the traditional sectors will still keep giving you 12 to 15% CAGR. That's typically the growth rate at which those industries have been growing. But a lot of these new companies will be able to deliver growth rates in excess of 40-50%. And that is something that will excite a lot of investors going forward.
Yes, good evening, everyone. सब कुछ है तो और क्या चाहिए, right? So that's the question. I would say two broad things. One, the fundamental fabric of any economy is two things. I can jargonize it, but I'll say more people working smarter, labor force participation and productivity gains. India has both those things going in the favor. If you looked at all the previous big rallies, say Japan circa 85, you would see that one of the two elements was missing, right? India 20 crore new working age population gets added the next 2 decades. Secondly, the productivity gains is just about starting. Everything else that's happening around it, your fundamental GDP growth will largely be good for the next 15, 20 years. There is no other sort of country outside of India which is such a large sort of consumption market, a well-oiled democracy, expectable judiciary, and as I said, a consumption market. So that way, if the fundamental fabric is good, the third element that you need is flows. Paisa bahar nahi ja sakta, right? If you are resident Indian, you can send 250K a year. You are an NRI, you can send $1 million a year, but that's about it. The percentage of household savings coming to equities in India last year was 5.6%. We have topped $60 billion. Developed markets, most of them are above 20, US is 43. Right? Incrementally, if real estate is not that big an attraction, and you pencil in a 10% number, you're talking about $150 billion in India in the next few years. 12 lakh crores per year on an equity size of 50 lakh crores. Right? So if you don't make very big mistakes, you will do good for 10 years. And I think if you have that sort of cushion, comfort, or netting, then I think that is in and of itself a very big deal to have.
So you want to know only for 2026 or
Maybe the next 30 years, that's fine.
so 30 years? I don't know what stocks are hold for 30 months, but I'll just tell you that there are strategies that a lot of fund managers will use. Fundamentally, I believe tech will do very well. Anything, so profit pools in India will there'll be few players in every industry that will become so large, they'll start dominating 30, 40, 50, 70% of profit pools. Right now, Nikhil just said that tech is going to be large. And I do agree to that point. Right now, the new age startups is the total market cap of India is 500 lakh crores. Startups, all these startups combined right now is at 8 lakh crore. So they are 1.5%. Eternal at whatever 3 lakh crores, Swiggy at 1 lakh crore, etc., etc. I'm not just taking stock names, but I'm just telling you the overall industry market cap. In US, semiconductor and technology is 65% of US market cap. And Nvidia came with numbers yesterday. In one quarter, Nvidia made $31 billion. The size of, even at this scale, you have your Microsofts, etc., which are growing at 20-30%. I'm not saying every tech company is a good tech company. All I'm saying, think in these terms that who are the guys who can build sustainable growth engines, a large TAM, and who are the players who will capture this large TAM. It can be insurance brokers, it can be car selling companies, but fundamentally, tech will build monopolies. It always has built monopolies and duopolies. They will take the entire profit pool, the entire value chain will move towards this tech profit pools. And if that happens, and there will be new IPOs, of course. There will be many bankruptcies also that will happen in this, but that is one place you can make outlier gains, not just for 1 year, the next 3-4 years, 5 years. And yeah, but they are all at starting stage. These cannot be 100% of your portfolio because they are very emerging in nature, but they will end up becoming monopolies. Fundamentally, few of them will become successful and make it so large that it can change your life both ways. So you have to be smart, understand the game well, but that is one play that I would say. Yeah.
Abhijit, you asked us to, besides the obvious, what's so exciting in India? For us at Abacus, we feel India right now is transforming, right? We all say India is 20 years behind China, which is true. But I can tell you for sure that India is not going to take 20 years to reach where China is today. The kind of technology which we are using, adopting, is so rapid that we'll definitely take maybe 10 or maybe 15 years, maybe even less. But it's definitely not 20. And that's what the excitement is. The scale and the size that India can develop is unparalleled. And that is right now visible. Whatever new India is building, Whether it is the Terminal 2, the new airport, the new metro or UPI app or anything, it is world class. You land at Terminal 2 in Mumbai or the Bangalore or the Delhi airport, it is better than US airports. It is at par, equally good to what the Changi airport is. Something like that, right? That's what it is. The new buildings, the new offices that we go to, whether it's Gurgaon or Bangalore, even in Mumbai, they are world-class offices, right? So that's what India is all about, transformation. And companies that are going to benefit and be part of this transformation is something that is going to be sustainable investment thing for us for almost another decade or so.
Yeah, thank you so much. I just want to add something from my side, because we all talk about the great India story. Two things, one is I had the fortune of going to small cities like Dimapur, Alleppey, Shillong, and I met investors there. And for the first time after so many years, I can actually see pride of being an Indian. And there are a lot of people who are believing that they can actually put money in the Indian stock market. The proverbial animal spirit is at play. And in my last assignment, I used to work for investment bank, and we had 15 IPOs, and I met every single promoter. And one of them told me कि मुझे ना 30 साल लगे 400 करोड़ बनाने के लिए, ये same 400 करोड़ मैं 5 साल में बनाऊंगा अभी. That is the kind of growth story because of the capital market. So that will hopefully help all of us make money. And if you want to retire early, you have to put money in their schemes. Maybe you'll get much higher returns. So the next set of questions will be individual questions. Famously Prashant keeps on saying, right, Prashant Jain, कि अगर आपको मेरे पास आना है तो मैं आपको 10%, 12% दूंगा. So now if you have to go, and by the way, people who are on the phones, I hope are not on Instagram or money control, they are writing notes down. आप आए हो सुन लो, बाद में कर लो ये सब. But if you want to get a higher return, we go to these specialist fund managers who have their own money in these schemes and who have the conviction of identifying stocks. We'll start with you, Amit. Amit and I discussed that he's a Sindhi, and I live in a building full of Sindhis. And Sindhis know what to do with money, and I say that with a lot of respect. So you have a 4M philosophy, right? M for market, M for management, M for moat, and M for momentum. So the question is, if you look at this philosophy and you look at, let's just say 1 year, so next year फिर से आपको बुलाएंगे. 1 year में, if you look at this philosophy and can you tell the audience that how would that help you in 2026, and how can they go to the investors and discuss with them what kind of alpha you will get in your schemes? And just one addition, sectors. Please cover some sectors.
No, so I just said on the 4Ms, I'll say on market leadership, there is nothing worse than competition in business. This is what Peter Thiel said. Monopoly is the only condition of every successful business. And when promoters say that, oh, competition is healthy, good, all the crap. Boss, when you do business, you want to create a monopoly. That is where biggest profits. Reliance created monopolies only in everything that they did, or duopolies in telecom. But that is how big money is made when you control the industry. Second is market opportunity, size of market. Boss, चश्मे वाले पे bet करोगे कि टाई वाले पे? टाई तो 50 लाख लोग पहनेंगे, चश्मा 50 करोड़ लोग पहनेंगे. Not that I own Lenskart, but I just thought of this example. So 50 lakh Indians wear ties. I don't know how many people are wearing ties here today. I can't see many. But 50 crore people. So you want large TAM. And in that you want a guy who can create monopolies. अभी जो टाई बेचेगा वो कैसे बड़ा बन सकता है?
हमें आपने पीछे टाई पहना हुआ है.
फोटो के लिए. Then, what was the third thing? Management. Only mad people make money. You do not make money. People who I would have met, I don't know how many promoters. Or people who say this, that I want to work 40 hours a week, I don't want to work Saturdays, Sundays, good. You will be that M for middle class. If you want to be super rich, then you have to work super hard. You have to outwork everyone. And you have to, this is the management that, see, I've made money, lost money, and I keep making money all the time. But I've seen the biggest money that I've made is people who are so hardworking and so greedy. Because at 50, 100 crores, you have your BMW, you have your Audis, you have a great house, you have whatever, a great wife, probably other things also. So you have everything at 50-100 crores. But wahan se to hamara investing chalu hota hai. Right? We buy a company who's making 100 crores profits. Beyond that, what is needed is vision, that ambition, that greed, that madness, that at 1,000 crores also, he's thinking of 5,000 crores profit. At 100 crores, he's thinking 500 crores. That is your aim, and he has to do it ethically. 90% promoters have become ethically, but because an unethical promoter value is zero. So these are the four kind of things that we need: a mad opportunity, market leadership, mad promoter. Yes, so those are kind of things, and momentum in earnings. However good I think that promoter is, if he's not showing quarterly earnings or things, it's useless. Because my investors, see, all my investors are long-term investors, and everyone has their 10-year horizon. But everyone looks at their portfolio at 330. With PMS Bazaar, Amit will call me that, sir, portfolio acha nahi kar raha. So you need that consistency of returns if you want your investors to stay in the game with you. So yeah, those are my 4 M's.
Thank you so much. You reminded me of an investor I'd met in a place which is a 2-hour drive from Kolhapur, and he had 68 cars and he had 2 choppers. And he was one of those entrepreneurs whom I don't want to name. But yeah, there is a
There's only one guy.
There's only one guy like that, yeah. But you're right, you have to be super successful, and that is where you create wealth for everybody else. So thanks for that. Jigar, you want to say something on the sectors? Sorry. Let me just, no, I just remember something else. We were discussing, and Sindhi is one community. My wife is a Gujarati, and I'm a middle class Maharashtrian. So that's where I learned to collect money, count money, save money, and not spend money. But Jigar, I'm hoping that you are good too. Yeah. So once I sat through Jigar's presentation with the clients that we had, and it was enthralling. It was enthralling the way he had control over the numbers and the way he spoke with the conviction. So you have a core and satellite approach, and that has given massive risk-adjusted returns in the last so many years. And I think your money is also growing in, and a lot of them are sitting with their checkbooks outside. So what do you look forward to 2026, and anything that you want to add also on exit strategy? When do you exit a stock?
Right. So see, our style is sort of, Amit very well articulated here. Our style is sort of starts from the other direction. We think choosing the right sector is more important than choosing the right stock. Obviously, there is, like, even if the goal is one, there are several sort of ways in which you can approach that. For example, between 2008 and 2010, the worst performing FMCG stock still was better than the best performing real estate stock. Right? These are extreme examples, but I think choosing the sector comes before choosing the right stocks. To that end, at least at Buoyant, what we do is there are times when we are super aggressive, like post-COVID, post-Russia-Ukraine, we were 63% small caps. And then by 2021, or like by September 24, we were almost on the other direction. So, getting in and out of the market, I don't think really is a choice, at least in a market like India. And I'll give you sort of, and I think different versions of this have been played out in different panels. But if you were an investor in the past 25 years, top 10 days have driven 57% of index returns. And top 30 days have driven 87% of index returns. So, if you get in and out of the market, you will most likely miss out on one or all of those days. You will develop sort of feelings of missing out, and then we'll get in at the wrong time again. So there are times when we are super aggressive, times when we are very much defensive, trying to protect the downside. But for us, at least, the sector selection trumps the stock selection. 2026, I think, 2 or 3 factors with which we were working over last year, the tariff related issues. I think there is an emerging consensus. I was on a panel with a former ambassador just last week, and then the common belief I was led to believe is that it will get resolved in the next 2 or 3 months, if not sooner. But I think the policy level shifts in India are not really well appreciated. So capex at the state and center level was pulling India's GDP higher, right? States were growing 30% plus, state center PSU was growing 25% plus, and sort of that was pulling India's GDP. We did the analysis of the past 17 states that went into elections recently, and their announced freebie bill is higher than their capex bill. Thankfully, they've provided only half of what they've announced, but that still meant that capex is down. Center has also pushed capex out. Schedule 7 constitution, center can spend only on 3 parts: national highways, national railways, and defense. Everything else is a state or a concurrent subject. So if both those capexes are going down, then you have two implications. One, your potential GDP growth is curtailed, right? Capex is 2.5 times RevX in terms of impact on GDP. And secondly, it takes time to transition, which is very well apparent in the quarterly numbers that you are seeing. That plus sort of RBI mismanaged September, October 24. Next year, I think all of those parameters are solving. Tariff related issue is solving. At the margin, quarterly profitability is getting solved. I would say flows, are at the domestic side will more or less remain good. But even at the FI side, see, India had a very unique situation where rupee depreciated against a depreciating dollar, right? The DXY index fell from 110 to 98 and rupee went from 83 to 89. That I think at the adjustment level, the REER level is now even. So I think the confluence of events are getting together. I would be sectoral wise a lot more focused on discretionary, a lot more focused on pharmaceuticals, but trying to get as far away from capex and heavy capex sector as possible.
So you're saying you're not really sector agnostic. You go in the sector first, then you go into the stock.
So sector agnostic in a sense, most sectors do. Like we are happy to go anywhere where we find there is value. But in India, predominant investment philosophy is, choosing the right company, right management, and building it up from the bottom. We slightly come from the other direction.
Thank you so much. I just remembered something because there are still some people on the phone. I had met a client 2 hours drive from Surat who had given us 450 crores. And he had lunch with us for 45 minutes without his phone. He said, जब meeting में जाते हो phone छोड़ के जाना. So when you're spending time here with so many gurus giving you GAN, keep your phone away. That's my request. So let's go to Aman. Aman, you have this at Abacus, and Sunil I know for many years. Once, in fact, because of Sunil, I had met Rakesh Bhai in a very small forum. So I'm grateful for that. But you at Abacus, where you have grown so rapidly, my God, the numbers, I think, have you touched 3 billion or 5 billion or 10 billion? I have no idea now. 4 billion, yeah. I think give them a round of applause. $4 billion is massive. Yeah. So you have this very interesting MEETS framework, meets management, earnings, events, technicals, and sustainability. So that's what I want to understand, that out of these, what matters more, and how would that help the investors or the clients of the wealth managers here to get a larger alpha in 2026?
You asked me what matters more. I'll give you the answer for that, which is beyond the meets. Meets is something which is basic. Anybody in the whole world, forget India, will tell you management is the captain of the ship, is the most important factor. We also say the same thing, nothing different in that. For us, what matters most is that we believe, and we are small minority shareholders. We are here for investments. So we have two simple rules. One, a great company need not necessarily be a great investment. We all know the great companies of India. You don't need even chat GPT. You can just Google and you will get all the names. But are they great investments? Maybe, maybe not. They are only if you have the right value. That is what to us is very important. That what is the price you are paying? However good the company is, however good the sector is, however good your macro call is, micro call is. But if you overpay, eventually your upside potential is limited to that extent. That is something very clear to us. And we also have this very clear view that my clients. Some of them are sitting here, some of them are potential clients, some of them are ex-clients. All of them gave me money for a financial return. None of them gave me money to get a medal to own the best companies of India, to get the sector right, to get the economy right, to get Modi right, or get Trump right, or whatever else. Ultimately, everybody seeks returns. So you have to get the best investments. And for that, obviously, there has to be a framework. We are not hedge funds, we are not cowboys that we will do whatever it takes. Within a certain framework, within a certain strategy is something that we work on. But this simple rule, and we follow this rule, and the way we follow this is by following a style that we call that we are value conscious. So we are not pure value investors that I'll buy a 5p stock or a 5% dividend yield stock or something, but we are value conscious. I'll not blindly pay a premium. If it is justified, definitely, but just because you are the leader, you are the market favorite, you're the best sector, best company, XYZ, but will not blindly pay you a premium. So that has helped me or the fund over the years that there's always this scope that the multiples can read it if the company does well. And that has been one of the big driving forces for us. And that to us has been the, you can say, the secret sauce or something. For this to happen is the meets framework, where you have a framework where you focus on earnings, then value, you focus on trends, events, and things like that. But ultimately, we feel our success lies in this value conscious style of investing.
Thank you so much. Let's move to Nikhil. And Nuvama has kind of grown from ground up after moving the business away. And I just want to say something. Once I had met this European private equity fund, and we were discussing your entire performance, and they were actually saying that this seems to be the business, asset management, which can actually create the maximum valuation. So inshallah, it will happen. But let's talk about your own investment style. And we were discussing inside before this. One thing I also wanted you to focus on is as your fund sizes keep on going up, क्या change होगा? क्या जैसे आप मूव करोगे 1 billion से 2 billion, 3 billion, तो आप क्या change करोगे? And currently, what do you think is going to help you give that alpha in 2026?
So, Abhijit, two things happen as the size of the AMC increases. The first thing is clearly the investable universe starts shrinking a bit as size increases, because liquidity, entry and impact cost becomes extremely high if you are then getting into stocks which do not match the liquidity criteria. And ultimately, if you're not buying at least 2-3% of the portfolio in a particular company, then it will not move the needle for the portfolio. So that is one of the constraints that clearly moves. And the second thing is, as size increases, you have to be very structural in stock picking. The number of tactical bets probably that you can take as size increases keeps on diminishing. So that's the second constraint that comes when you are managing large portfolios. But I think over the longer term, it's a good thing to have, because then you don't start focusing on the next quarter or the next 2 quarters. Whenever you are looking at multi-baggers, you will always have those things where 1 or 2 quarters earnings will miss. You will have 10, 15, 20% stock corrections. But ultimately, if you see that the opportunity size is extremely large, then probably eventually you will still compound at a long way. Just to give you an example, if you just take the capital marketplace in 2020 when COVID happened, you were at 3 crore demat, and the trend was just picking up. Equity cult was growing. I remember LIC had done auction of NSE shares at close to 1100 rupees. And today, if you look at it, when you are at close to 20 crore demat shares, the sort of earnings of NSE itself have compounded at more than 5-6 times. And the same thing is today quoting at close to 10,000 bucks. So if the tailwinds are so strong, then probably you should take away the focus from 1 or 2 quarters. You will have those problems and focus on the larger picture. Similarly, when you are talking about exits, once you are past that hyper growth phase in a particular industry and you see the industry dynamics deteriorating significantly, I think you have to be a bit smart in sort of timing your exit as well. So just to give you a perspective, we've seen solar manufacturers going through a hyper growth phase in the last 4 or 5 years. The contribution of renewables in the pie was very low single digit. As you stand today for the industry, you have announced module capacities of close to 140 gigawatt. And last year we did installations of just close to 40 gigawatt. Now the point is with solar, we have not invested yet in battery storage solutions. So you can only produce during the during the daytime. And ultimately for your base load, you will still have to rely on your conventional thermal power producers. And it is not possible that, during night you operate at 85% PLF, during day you move to 10%. Eventually it will create scheduling problems for SEBs, and it will become much more difficult for solar manufacturers to tie up with PPAs once you get to those 20-25% market share. So that's one of the things that will start giving you that red flag that you have to look. And then what you have to also see is that the industry is making supernormal profits today. For a 1 gigawatt of end-to-end integrated capacity from cell to modules, you need 600 crores of capex, and you will make close to 2,500 crores of revenue, maybe 500 crores EBITDA, which is extremely high profitability for a commoditized business. So in such cases, you have to be very smart in terms of exiting before the profitability actually starts to deteriorate, because the multiples will start factoring that deterioration much before the actual earnings decline starts to come. So that is just to give you some perspective on how we also time the exits for the portfolio stock that we buy into.
Thank you so much, Nikhil. थोड़ा सा एक fun करते हैं, this is not planned, because we have some time left, and we're talking of the winning formula behind top performance. And because in the morning, initially you challenged me saying sales or fund manager. So it's an optional question. Okay, you have the winning formula, you have the track record. Can you give a elevator speech, one-line speech to your salesman who will go out in 2026 की boss customer को आपका PMS की या AIF क्यों buy करना चाहिए? Optional question, and अभी आप देख लो किसको आंसर करना है. One elevator speech for putting money in your scheme over the other three.
I tell my sales guy that one thing which he can tell to each and every client, whether he is an existing investor or a competitor investor or looking for investing in the equity market, that the portfolio at Abacus is going to be very differentiated. It's not going to be the traditional run-of-the-mill HDFC Bank, Kotak Bank, ITC, Lever, Nestle, and so forth, right? So that's the way it is. So we may give right or wrong, but this is what we are, and this is the way we differentiate ourselves. So it will be completely unbenchmarked, stock-wise, sector-wise, weight-wise, and at least 20% of the portfolio will be stocks where we will be the first or the only institutional investor. So we take pride in that to be early investors. So that's the pitch I give to my sales guys, and that's the point.
Thanks, Aman. Anyone else? One line sales pitch, elevator speech, anybody?
For buoyant, so difficult to pitch it, but
Sales is a difficult job, I'm telling you.
that's why he said sales makes more money than fund manager. No, so okay, so all right, so if you look at just the CAGR, buoyant would be sort of a top quartile fund, 1, 2, 3, 5, and 7 years. But we have achieved that having sort of maintained beta of the portfolio at 1 time or less. On a 5-year rolling return, we would be at 96% consistency on a daily rolling. And we have executed this sort of following a strategy, which at least I think is entirely different vis-a-vis others. And more importantly, we do it by having a single strategy framework, right? So lots of PMS AIFs in India, I would think about 400. But ones that are of size, say more than $1 billion or so, I can think of only 2 who run a single strategy, right? And buoyant obviously is one of them. And more importantly, there is almost 100% skin in the game. So 3 of us, our spouses, and buoyant's treasury money is all invested into the buoyant fund. And that is our attempt at completely aligning ourselves with the end investors.
That's fantastic. Give a round of applause, please. Any other try, or should we move on to the next question? Okay. Huh? You want to? Try it out.
So I think we've got a lot of similarities with the 𝐻𝐽's fund. We've done okay on returns. We've done decent, I would say, on returns.
Very good you have done return, not decent. Very good.
Modesty had a
I know,
face.
I know.
खुद की तारीफ करना अच्छा नहीं लगता है ना. But like I'm very consistent on our betas, what 𝐻𝐽 said. Like I'm just going to copy him. Our portfolio betas are like way lower than the benchmarks. Standard deviation is way lower than benchmarks. We'd be in top quality names mostly. Very high growth names, market leaders. So that's how we don't do government stocks. There are some filters that we do have. We don't do cyclicals. Yes, so we've been very consistent most of the years. And yeah, if anyone like this, like we have a very consistent investment philosophy. We try to get it right on all three things. My customers want only three things: decent returns, reasonable risk, and great communication. We try to get it right on all three. We work extremely hard that we can be able to get it right on all three. So our returns are, as I said, very reasonable. Are decent, I would say. Our risk is very reasonable. In every drawdown period, you can see how we have performed in drawdown periods. We've done a decent job, and probably that's the reason why our betas and standard deviation is so low. Making money is one thing, making money consistently is one thing, with less drawdown is one thing, and we get right all three times. Communication. At end of every quarter, साहब आप लोग हमारे ओनर हो, मैं तो मैनेजर हूँ. You can invest our investments in Stallion. You can decrease investments in Stallion, and if we don't perform, don't be scared. Fire us as well. It's okay. We don't deserve your capital. But you're the owner. At end of every quarter, we will come to you and tell you. Of course, we have an app where you can keep tracking what is happening to your money. But end of every quarter, we will come to you and tell you what exactly we did for you. What are the stocks we bought? What are the stocks we sold? Why did we buy? Why did we sell? What are we thinking at any point of time? We are a learning firm. Every day we are learning, trying to get better. जो भी कर रहे हैं आपको, क्योंकि ओनर तो आप ही हो, हम तो सिर्फ मैनेजर है. You can do anything too. So we come to you very transparently at end of every quarter and tell you whatever has happened inside Stallion, the new strategies, new thinking. So yeah, that's all we do.
That's fantastic. He is a great salesperson. Thank you so much. You want to give it a try?
अभिजीत, on a lighter note, distributors सिर्फ एक performance की slide देखते हैं. पहले pitch तुम्हारी कितनी भी अच्छी हो, सबसे पहले they will move to the performance slide and see what have you eventually performed, and only then they are willing to hear to your pitch. But at Nuvama, what we definitely give a lot of emphasis is, picking stocks where the margin of safety is extremely high. So we do not want to get into stocks where outcomes can be binary in that sense, where, if a particular event pans out, you probably make 50-60%, or if it doesn't pan out, then probably you lose also. Because for us, return of capital is also equally important as return on capital in that sense. So our philosophy has always been that you have to smoothen the volatility of returns in that sense. And therefore, if you look at the standard deviations of our portfolio, it will be at least 25 to 30% lower than even what an index volatility will be per se in that sense. So that is the guiding principle for us at Nuvama, that contain the drawdowns and volatility of return.
Thank you so much. I think time is up. I had 2 more questions to do on rapid fire, but I think it's fine. I think thank you so much. And I got a lot of gyan from you guys, and I will now go and buy some stocks. But you please catch them on the way out and take some photos and ask for some tips. But thank you so much.